So I'll just a second, yeah. I'm keeping my camera off, so maybe that may be the reason.
Yeah, absolutely fine now. It's audible.
Yeah. Okay. So a very warm welcome on behalf of DMIMS for on the day 4 of this Atal FDP on finance for non-finance. So just a quick brief introduction about sir. Manish Tabriwal sir is running an investment product distribution firm in the name Arya Chanakya Investment Services Private Limited in Nagpur. He predominantly deals with the mutual funds and investment into shares for the last 17 years and manages an assets of 200 crore plus and advises, or I can say interacts with more than 1,000 families. Tibriwal sir is also giving consultancies to Indian organizations and multinational companies with international standards 2001, ISO 22000, ISO 27000, ISO 17025, etc. for the past 24 years. So this itself shows that how much rich experience he is having. In finance field, his areas of specialization lies in technical analysis, money management, and understanding the psychology of investors, which is much needed whenever we do financial planning. Apart from this, he has also done various certificate courses from BSc, like on technical analysis, fundamental analysis, advanced program on derivatives, etc. Apart from that, he has also done a certification course from NISM. The module is FIMDA. He has also done certifications on NSE debt market, commodities market, and mutual fund advisor module. So, with this, sir, we once again welcome you, and I'm sure the participants are going to gain a lot of practical knowledge. So,
Thank you.
over to you, sir.
Thank you so much. Yeah, I'm the host now. Can I share my screen?
Yes, sir, you are the co-host. You can
Okay.
share the screen.
Yeah. Is my voice audible to everyone?
Yes, sir, your voice is audible and your PPT is also clearly visible.
Fine.
Yes, sir,
Thank you.
audible.
Thank you. Yes, good afternoon to all of you. So we are just jumping into the understanding the gimmicks used by financial advisor. So I'm starting with this video clip. I hope everybody must have seen this video, but to set the tune rolling, we'll revisit this video. Please let me know if it's audible to everyone.
Yes, sir, it's audible.
आइए साहब, कैसे हैं भाई साहब? बहुत देर के बाद दर्शन हुआ आपका। लगाना जरा एक चाट पापड़ी। हाँ भाई लो, अच्छा बनाए भाई। बना रहे। भट्टी साहब, मैं सोच रहा हूँ हिंदुस्तान फीवर और क्रुक बॉन्ड के हजार शेयर खरीद लूं। यार तू क्या हमेशा शेयर खरीदने और बेचने में लगा रहता है? आजकल जमाना है, खुद अपनी कंपनी बनाओ, पब्लिक इशू निकालो, लोगों का पैसा इकट्ठा करो, अपना बिजनेस चलाओ। ये थोड़ा है कि हर एरा गैरा गोलगप्पे वाला पब्लिक इशू निकाल दे। तो क्या है, ये चाहे तो सुबह पब्लिक लिमिटेड बनाकर 1 करोड़ रुपया इकट्ठा कर लें। क्या कह रहे हैं? अरे साहब, हमको भी कोई ऐसा तरीका बताई दो ना कि हमारा बिजनेस भी एक्सपांड हो जाए। किसी दिन दफ्तर में मिल लेना इनसे। ये भट्टी साहब चार्टर्ड अकाउंटेंट हैं, सब समझा देंगे। अरे किसी दिन का बाबूजी, हम कल ही आ जाते हैं। और आप हमका समझाई दो कि पब्लिक इशू का है और ससुरा शेयर का है। शेयर का मतलब है लोग तुम्हारे काम में पैसा लगाकर हिस्सेदार बन जाते हैं। अब उनका पैसा तुम्हारे पास है, जो मर्जी करो। मगर भैया, गोलगप्पन के बिजनेस में कौन पैसा लगाए? मैं गोलगप्पों के बिजनेस की ऐसी रिपोर्ट प्रोजेक्ट करूंगा, लोग समझेंगे ये बहुत बड़ा फूड इंडस्ट्रियल यूनिट है। और कंपनी का नाम रखेंगे पीपी वाटर बॉल्स। ये कोई इंग्लिश कंपनी है का मालूम भैया? भाई, पीपी का मतलब है प्रेम प्रकाश, वाटर बॉल का मतलब है गोलगप्पे। अरे वाह भैया, ये तो हमारी कंपनी का ही अंग्रेजी नाम हुई, पीपी वाटर बलवा। सेबी और आरओसी से परमिशन लेना मेरा काम है, फॉर्म छपवाना मेरा काम है, शेयर निकलवाना मेरा काम है। अरे ये सभी तो हर काम है, तो हमारा का काम है रे भैया। आपका काम है 10-15 लाख का इंतजाम करना, इन कामों का खर्चा। 10-15 लाख का खर्चा? भाई फिर 1 करोड़ भी तो आप ही के पास आएंगे। प्रकाश, एक काम हो सकता है का? वो जो हमारा चाचा है ना लंदन में लाल सिंह, वो जो साउथ हाल लंदन में चाट पापड़ी बेचते हैं, हाँ, उसे 10-15 लाख मंगाई सकता है क्योंकि उनका बहुत देर हो गई है लंदन में भाई।
अरे यार उसे पार्टनर क्यों नहीं बनाते? आपकी फॉरेन कोलैबोरेशन हो जाएगी।
कहा रहे हो भैया लाल सिंह से कोलैबोरेशन?
अरे लाल सिंह नहीं, रेड लाइन ऑफ लंदन से कोलैबोरेशन, 80% एक्सपोर्ट यूनिट। आपके शेयर तो हाथों हाथ बिक जाएंगे।
एक फॉर्म पीपी वाटर बॉक्स पे देना भैया। एक फॉर्म मुझे भी देना।
अरे यार मुझे तो बताओ कि किस शेयर में पैसा लगाऊं।
भैया मैं तो उसी शेयर में पैसा लगाता हूँ जिसमें प्रसाद बताता है। प्रसाद से पूछ। क्यों भाई?
देखो जी, पीपी वाटर बॉल्स 80% एक्सपोर्ट यूनिट है, फॉरेन कोलैबोरेशन है, राइट प्रॉस्पेक्ट्स है।
ये वाटर बॉल क्या चीज है यार?
यार कुछ भी हो तो अप्लाई कर दे। प्रसाद का अंदाजा कभी गलत नहीं होता।
वो मुबारक हो प्रेम प्रकाश जी, आपका शेयर 5 गुना ओवर सब्सक्राइब हुआ है। सारे शेयर धड़ाधड़ बिक गए।
कहा कह रहा है भट्टी साहब, ना तो हमारे पास जमीन है, ना मशीनरी, न पानी है, न बिजली, और लोग हैं कि धड़ाधड़ पैसा फेंक रहे हैं।
अभी तो मुझे अपने बॉम्बे ब्रोकर से बात कर लेने दो।
हाँ करा करा जल्दी करा।
हाँ हेलो बिहारी। हाँ मैं बोल रहा हूँ भट्टी भाई।
हाँ बोलो सेठ। अरे इश्यू तो आपका बहुत अच्छा गया।
हाँ वो तो ठीक है, लेकिन ऐसे करो कि बॉम्बे दिल्ली मद्रास से अपने ही शेयर खरीद लो भाई।
क्या कह रहे हैं? अपना शेयर खुद ही खरीद लेगा?
भाई हम अपना शेयर खरीदेंगे, उसे देखकर लोग भी हमारा शेयर खरीदेंगे, देखा देखी भाव बढ़ेगा। हाँ बिहारी, अपना शेयर अखबारों में जरूर आना चाहिए, चाहे कुछ खर्चा ही करना पड़ जाए।
मैंने कहा था ना पीपी वाटर बॉल्स पड़ेगा, पीपी 22 का हो गया।
10 रुपए का शेयर 22 रुपए में? यार बेच दे।
अभी नहीं, अभी और देखो।
यार प्रसाद कह रहा है तो इसकी बात मान ले।
बिहारी कुछ लॉट और खरीदो यार, शेयर को उठने दो।
पीपी वाटर बॉल्स का रेट पता क्या है? 45 रुपए। यार मैंने गलती की, मैं प्रसाद की बात मान जाता तो अच्छा था।
अभी भी प्रीमियम पर खरीद लो, प्रसाद के हिसाब से ये शेयर और बढ़ेगा।
बॉम्बे दिल्ली मद्रास जहां से भी कोई शेयर मिलता है उठा लो बिहारी।
प्रसाद सब मान गए आपको। क्या शेयर बताया था? दिनों दिनों में 90 से ऊपर का हो गया।
रेड लाइन ऑफ लंदन के साथ कोलैबोरेशन है, ये तो 100 से भी ऊपर जाएगा।
भट्टी साहब, हर दफ्तर गली गली में हमारे शेयर की चर्चा हो रही है। हाँ, 100 रुपए में भी लोगों को नहीं मिल रहा।
भाई मिलना कहाँ से है, सारे के सारे शेयर है ही अपने पास।
और अब
वक्त आ गया, हमें सारे के सारे शेयर बेचकर 8-10 गुना पैसा अंदर करना चाहिए।
क्या स्कीम है गुरु? लगा बिहारी ब्रोकर का फुलवा। पीपी वाटर बॉल्स गिरना शुरू हो गया है, बेच ना दे। मैंने तो पहले ही प्रीमियम पे खरीदे हैं, मुझे तो बेचकर घाटा हो जाएगा।
चल थोड़ी देर वेट कर लेते हैं, शायद चढ़ ही जाए।
भट्टी साहब, आपको हमारे जैसा ब्रोकर नहीं मिलेगा। अरे आपका फोन आते ही 2 दिन के अंदर अंदर सारे शेयर निकलवा दिए।
वेरी गुड बिहारी, वेरी गुड। अब रेट चाहे 30 हो या 3, हमें क्या, हमारे पैसे तो पूरे हैं।
Yes, so this is it. So I'm asking a question to all of you. I'm putting that question in the chat box. What will the answer for that? Can you see the chat box?
Yes, sir.
Okay. Can I get some responses? No. No.
Presentation speaks more.
Okay, got that. Got that. So we talk about IPO. We say that we should not be investing into all IPOs. So that we have seen from the Jaspal Bhatti video. Now I'm coming to the NFO part of it. In terms of mutual fund, we say that a new NFO, 10 rupees NAV, we should invest into. So this is again a gimmick played by a lot of people, and then a lot of people get trapped by that. If it's a 10 rupees NAV, a new fund will always perform better than an existing mutual funds. So herein I'm taking one example of like now not all apples. So means when we compare apple, oranges, bananas together. Not all of them are same. So that happens normally when people invest into different asset basket. So herein I'm considering an example of Motilal Oswal Mid Cap Fund, which came. It got launched on 24th of February 2014 with an NAV of 10 rupees. At that particular point of time, I am considering two existing funds. One is an Axis Mid Cap Fund and one is a Nippon Growth Fund. Axis Mid Cap Fund got launched in 2011. On 2014, its NAV was 13.93, and Nippon Growth Fund NAV was 473, which had a launch date of 1995. So yesterday's NAV of these three funds I have written down in the next column, next row: 46.8, 70.64, and 2123. If you consider, if you calculate the returns which these three funds have generated from 2014 to 2022, it shows that they are almost equal in terms of their performances. Some difference is there depending on the fund performance, but it doesn't mean that a 10 rupees NAV will become 100 rupees NAV, and 13 rupees NAV will not become 100 rupees NAV, or 400 rupees NAV will not become 2000 rupees NAV. So again, this is a trap to which a lot of retail investors get trapped themselves into, participating into new fund without looking into the credibility of or the fundamentals of that particular new fund offer. Yeah. So now everybody must be aware of this image. I think every house has some LIC in it. Like sale, there is an ad that sale says that there is a little bit of steel in everybody's life. So little bit of LIC is there in everybody's life. So how a gimmick is played or by an insurance company. So what I shared is this is one of the endowment plan which my father bought for myself in 1993. So this is an endowment plan, and then when I was Google what this endowment means, so I got an definition of Akshay Nidhi. Endowment means Akshay Nidhi in Hindi, and Akshay stands for something never ending. Okay, so an endowment plan should not be over during my entire lifetime. That it means, and that's not the case. I'm just explaining my endowment plan results with you. It started in 1994, 26th of March 1994. My father was investing 2,516 rupees half yearly. And per year it amounts to 5032. It lasted for 20 years. It got matured in 2013. So in 20 years, my father invested 1,640 rupees. I got a maturity value of 2,18,800 rupees after 20 years. So this is equivalent to a return of about 7% over a period of 20 years. That too in those periods when MT interest rates were around 10% to 12%. And it gave me a return of 7%. Now, when I say that 2,516 half yearly, that amounts to rupees 419 per month. So I compare this with an SIP of 400 rupees. With an SIP of 400 rupees, that too means what I did is that I considered 19 rupees as being allocated for the term insurance and 400 rupees getting invested into a mutual fund So next table shows the performance of I choose Nippon Growth Fund that came in 1995. So with 400 rupees per month, I invested 76,000 for next 15, 16 years, 16 years, because the policy got matured earlier. So against an investment of 76 lakhs, this value was 9.8 lakhs. So this is against a return of 2.18 lakhs in LIC, vis-a-vis 10 lakhs approximately in case of a mutual fund. Now, if that amount would have still got invested, the same 76,000 rupees, now this is as on 31st December 2013, what I am sharing with you. If the same amount would have been invested as of now, this value would have been more than 40 lakhs, giving me a return of 22 lakhs. So that brings me to the terminology what we call as a combo product. Combo product is the product wherein we try to buy everything, combine everything into a single product. So ULIP is the best example for that. So when anybody advises a particular investor, it talks about long term, and then it says that next 20 years it will give you so much of return. As a retail investor, we are not able to understand that amounts to how much percentage. We see crores and crores of rupees of value, and then we are not able to calculate whether it is giving me 10%, 15%, or 20% return. So it all jargons. It's sort of what I call is bulbulaya. So what we say in terms of investments is that keep it simple. Means you should not be combining all your investment into single basket. Means insurance and investments at least should be kept separate. So continuing with the same earlier example, what I shared with you is that 400 rupees SIP amount. If I would have increased my SIP amount from 400 to 1,000 rupees, so I have considered that journey from 1995 onwards till date. Now this image is as of 31st March 2017. If I would have continued my SIP amount, 2,57,000 rupees would have become 61 lakh rupees in 2017. So that amounts to for 25% approximately CAGR return from 1995 onwards 2017. Now I have stretched myself to 2017, then I came to 2018. 2018, this amount would have been 70 lakh rupees. 2017 it was 61 lakh. 17 it is 70 lakhs rupees. Then next year 2019, again it was 71 lakh rupees. Then when I come to 20, it's 53 lakh rupees. This is the COVID period, the peak of the COVID period. From 71 lakh rupees, it has fallen to 53 lakh rupees. 21, it has become 1 crore rupees. So again, it has given a return of 22%. And even when I consider the 20 period, the peak of the COVID period, it was giving 20% return approximately, 19.7 to be precise. So instead of going into combo product, if I would have separated, means my father would have kept separated investments and insurance, then we could have generated so much of amount. Yeah. So that brings me to the next topic, that what I call is the booth, the ghost of past performance. Again, this is an area wherein people want to invest, seeing the past performance of their investments. I'm sharing one of the example. This is the performance of NPS. Now these figures are as of 31st December 2020. 31st December 2020, and this is NPS tier 1 government securities performance. So if you look at 1 year return, it was showing me, if I look at the first column itself. Now this table list or the GSEC performance of all the pension schemes which are available to an investor. So I'm taking example of SBI pension fund. 1 year return, it is showing me 13.46%. So on that particular day, I still remember. Now this return was getting published in Economic Times and other financial literatures, and people called me and saying that why should we invest into equity? Why not to go into a debt fund and as safe as government securities, which is giving me 13% return. So people don't understand the past performance. So uh, now I'm sharing the latest example of the same funds. This is as of 31st December 21. 31st December 21. If you look at the first column of SBI pension fund, in last year it has generated a return of 2.61%. It has generated return of 2.61%, and this is against past year return of 13.46%. Now people compare that this is very safe and then it will keep on giving me 10% plus return, then why to invest anywhere else and go in for government securities. But that's not the case. The reality is that in last year it has given me only 2.5 2.6% return. So this is how retail investors get trapped by seeing the advertisements, not advertisement to say per se, by seeing the performances which is getting published in different newspapers or different magazines or on Google or different websites. So again, it's a trap. Yeah. So that so what I shared is NPS performance. If I come to the even equity mutual fund performance part of it, I still remember 2008 journey. In 2008, now 2003 to 2008, there was a very big bull run, and in infrastructure funds have performed stupendously. They made a lot of money for retail investors, and I still remember that seeing those past results, people invested into those infrastructure funds, and in last 13 years after 2008, they are not giving even a single digit return. In 2008 they were giving me 50% return for last 5 years on an average, CAGR return I'm talking of. And as of now, for 13 years the returns are still in single digit. So winners rotate, what we call them as winners rotate. It keeps on moving, it keeps on moving. So you need not see only the rear mirror, you need to see the front mirror as well. And front mirror is not available to retail investor, and then that's why they get trapped with the side mirrors. Yeah. So another topic is fixed deposits. Whatever amount you invest into fixed deposits are safe or unsafe?
Safe.
Safe. Okay. So I invested a crore of rupees in a fixed deposit in SBI Bank for 10 years or 5 years. Will I get my money back after 5 years?
Yes, sir.
Okay. No, it's not the case. It's not
Up
the
to 5
case.
lakh rupees only it is guaranteed.
Up to 5 lakh rupees. Yeah. But when I go to bank, and then I don't imagine that I'll not get my money back. It happens only means we have seen a lot of frauds happen in recent past. A lot of banks, cooperative banks, even nationalized banks, they face difficulty. Government is putting in money, and that's why the retail investors deposits are safe as of now. So what you said rightly is that the Deposit Insurance and Credit Guarantee Corporation gives the maximum guarantee of 5 lakh rupees, including both principal and interest amount. This limit has increased recent in past. It was earlier only 1 lakh rupees. So again, retail investors don't understand the risk of investing into FDs as well. Though they say that they will get 6%, 7% return, but there is always a risk of principal as well. Now it's not happening as of now, but there are instances wherein now we see in China there is a default. We saw event of Ireland FS. We saw a lot of other events as well, and then there are sovereign defaults as well in past, wherein the country was not able to repay their debts. So again, it's a trap. Yeah. So rating. Do you invest into mutual funds or into bonds or into stocks by seeing the ratings? So this is with rating and this is without rating. Should we trust star ratings while buying a mutual fund?
No, sir.
Personal experience? No.
Sorry.
No, sir.
If
We
I
should
share my
go through
personal
the.
experience, then I would say no.
Okay. Then what the star for what ratings are then for? For whom the ratings are?
It may be fraud, sir.
Okay, got that. So it is observed that different rating agencies provide different ratings to same mutual funds. I am using word mutual funds, it could be other assets as well. Different rating agencies provide ratings based on different parameters, hence there is a contrast in ratings. Some give higher weightage to returns, some give higher weightage to risk, some give higher weightage to corpus, some give different weightage to portfolio composition, and so on and so forth. So here is an example of different funds rated differently by different rating agencies. And then the difference is so huge that one is giving 3-star and another is giving 5-star to the same fund. So I see a lot of people, when I interact with people or investors, they say that this fund got a rating of 5 and then why you're investing into a rating of 3. He doesn't understand comparison of apple and oranges and the credibility of even rating agencies for that matter. And even the logic used by the rating agency for evaluating a particular fund or a particular asset. So again, it's a very big trap. Means people get trapped by investing into 5-star mutual funds, and then at times that 5-star is not 5-star after a year or so. So as I said, that winners rotate, so this keeps on rotating. But even in that case, it's not true, because it's all, these ratings are all lag events. They are not given after seeing the front mirror of the vehicle. It's all rear mirror. So I cannot base my decision based on the rating part of it. But this is easily available information to retail
और कल
investor.
पे डाला है, अब नहीं डाल रही हूँ मैं.
So, but this being easily available to retail investors, they see that part and then they start investing into higher rated funds or debt funds, or even for that matter, stocks as well. Yeah. So this is again, I heard a lot of people say that you should not invest into mutual funds, and then instead of investing into mutual funds, one should hold a stock for a long term. Do you believe that one should hold a stock for long term? Any responses for this?
Yes, sir.
Okay. Okay.
Yes, sir, but it depends on the company in which you have invested.
Okay.
It also depends on the risk appetite of the investor.
Yeah. Risk appetite is as far as individual stock or individual or a portfolio is concerned. Risk appetite is always there with individual stock. Absolutely, it's there. But should I be holding a stock for a long term? And then how that long term should be? Means 5 years, 10 years, 15 years, 20 years, 50 years.
I believe at least minimum 3 years should be some. I mean, you should hold the stock for at least 3 years.
Okay.
Minimum, this is what I believe.
Okay. Got that.
Sir, it depends on market condition too. If you like increase your stock with maximum limit, then you can think to sell it out because market is fluctuating.
Okay.
Since the market is very volatile, sir, so quarterly investment we can also do quarterly investments.
Okay, got that. So, but how you know that a particular stock has peaked itself?
What, sir?
How you know that a particular stock has peaked itself, means you said that, means somebody said market is volatile. So how I know ki I invest a particular stock in, means I bought something 100 rupees and then it has become 200 rupees. So should I exit or should I stay invested over there?
Sir, you should book the profit because the market is very volatile and it depends on the sir beta of the company also.
Okay.
Sir, how volatile is the market? We can look at the beta of the particular company. So it will
Okay.
give some an idea that whether we are going to hold in this company for a long period of time or just to get back.
Okay. Okay. Now you touch upon a new topic altogether. It's a new Pandora, means it's a Pandora box, beta. Okay. So beta tells me about the volatility of that particular script as compared to the index part of it. Huh? So my question is, if I bought a stock for 100 rupees, how long should I be staying in that particular stock? So there is no answer to that per se. Means you whatever you shared is shared. So I'm taking an example of Hindustan Unilever from 2000 to 2010, 10 years. From 2000 to 2010, it moved from 300 to 100 and again back to 300 rupees. Hindustan Unilever has not moved anywhere in 10 years. So this is a share of this is a chart of Hindustan Unilever. This is a quarterly chart. From 2000 to 2010, it has not moved anywhere, and from 2010 to 2020 or 21, from 300 it has gone to 3000 approximately. So there are so again, means people say that we should hold a stock, good stock for a long term, but I wasted my 10 years into that particular stock which has not moved. If I would have invested that amount into some other stock, then I would have made money. So again, people get stuck to a stock. There are people who only want to buy and then they cannot sold a stock. They cannot sell a stock. And I see a lot of people, they say that this is there for the next generation. Now, somebody rightly said that the market is so volatile. I don't know whether that particular business will be there for next generation or not. So we need to keep on tracking that particular investments, whether I should be continuing with that particular sweep or not. Okay, now being involved into a consultancy business, interact with a lot of industries. I've seen industries. I mean, in 10 years, a particular industry is getting over. Means a new industry coming into picture, and then the old industry is not able to survive itself. The cycle has shrunk now. ITC, another example, it's not moving anywhere since last 8 years. There are multiple reasons for that. I'm not talking about those reasons over there. Hero MotoCorp, it has completed almost 8 years of non-performance as far as stock returns are concerned. As an organization, it may be performing, but in terms of stock market, it's not performing. So again, it's a trap. People say that instead of buying mutual funds or instead of buying a portfolio, you simply buy a stock and then hold it for 20-30 years. Like there's Reliance or HDFC Bank or Infosys or TCS in people's portfolio sitting for last 15, 20, 30, 40 years as well, depending on the script. Yeah. So this is again another very good part that people say that you invest into a stock which has fallen. I have taken 50%, for example, over here. Invest into a stock which has corrected. Is it true? One should invest into stock which has corrected, say, for example, 50%, 60%.
Maybe hedging of risk.
Okay. Hedging of risk. Okay. Okay. So I'm taking an example of Suzlon over here. Means there are more examples also. I can share all of them. Now, Suzlon corrected from a peak of rupees 450 in 2008 to rupees 12 in 2021. 450 to 12 rupees, huh? In a span of 13 years. I started my investment journey by investing into Suzlon. Means I bought a share of Suzlon when it was at 75 rupees, and then when I understood that it's not worth investing into, I exited that stock at 50 rupees. So that was the biggest lesson, means how to value a particular company and then where to invest and where not to invest. And then I still find people investing into Suzlon at 12 rupees. Means there are people who invested at 3 rupees, 4 rupees, and then they made money as of now when the stock is trading at 12 rupees. But this is not the wealth we are talking about. And then by doing this, by investing into such scrapes, uh, you are left with a portfolio of laggards. Yeah. Now, what I shared the video of Jaspal Bhatti, we are into the same era as of now. We are into the same era. Now you get advisors at the pan shop, ki dukan. You will find people suggesting investing anywhere. Means you will find advising, means people advising you to invest into so and so stocks.
Agreed.
Yeah, I see day in day out. So one of my investor recently bought Andhra Cement. Not recently, I think 4 months, 5 months back. Andhra Cement at say 35, 34 rupees or so. And Andhra Cement is now trading at say 17 rupees approximately. Now Andhra Cement moved from 3 rupees, 4 rupees to 35 rupees, and now it is trading at 17 rupees. So it moved from 5.3 on 3rd May to 36 rupees. Wherein there was no sale in the company and the company was making net losses. There is absolutely no sale in Andhra Cement. Now the next slide gives you the sales of Andhra Cement. I've considered the quarterly returns. So if you see 1, 2, 3, 4, 5, 6 from June 20 onwards, from June 20 till date, there is no sales. And the company is net making a losses of every quarter 50 crore rupees, 55 crore rupees. And people are buying Andhra Cement. This is just an example. This is just an example how an investor gets trapped. And in that journey, people make money as well. There is no doubt on that part. But the net result is that you have collection of antiques. So you begin with this, wherein the company is already burned itself, and then there is only a butt remaining, and you keep on collecting those things, and then you have portfolio of these butts. I'm talking about the retail investors who don't understand the balance sheet part of it, who don't understand what to buy and what not to buy. So there are a number of examples as of now, wherein, as we saw, PP water balls, red lion exporting to UK. Same thing is happening now. If you open a TV show, you will find so many anchors talking about that particular thing, and then you don't know where you are getting trapped yourself into, because you don't have data and then you don't have skill to interpret those datas. Yeah. So that now brings me to the next topic. This is invest into high dividend yield stocks. Have you heard about this term earlier?
Yes, sir.
Yes. So one should invest into high dividend yield stocks.
Yes, sir.
Okay. Thank you for your responses. So what is a dividend?
Out of the profits, shareholders are rewarded.
Yeah, out of the profit, shareholders are rewarded. So instead of the dividend staying with the company, the dividend now comes back to the shareholder. Okay. So stock rises by the amount of the dividend, stock drops by the amount of the dividend. If you buy on the date of the ex date, if you sell before record dates, then you won't receive the dividends, and then you get a dividend if you are there on the ex date. Fine. This is the fundamental of it. But whether I should invest into high dividend stocks or
Yes, sir.
or my decision should be based on how the dividend is being paid by the company.
Depend on how dividend is paid by the company. It's from your operation cash from operations, like your current profit, or in like your surplus or reserve, from your surplus or reserve. It
Yeah,
depends on the situation.
Yeah, got that. So if a company is paying profit from its profit, sorry, if the company is paying dividend from its profit and not eroding its reserves, and I got that point. The company is making profit and then it is paying dividend, and then another company which is making profit and are not paying dividend. So which company is better?
We can't say currently. It depends on the situation. Maybe some companies pay dividend and some expand their business.
Got that. So there are people who say that this company is paying me dividend of 10%, 8%, 7%. I'll invest into that particular company. Why to go with a fixed deposit? Because fixed deposit is giving me only 6%, and then this company's dividend yield is 7%, 8%. So there are people who invest heavily into PSU stocks, which gives as of now good dividend as come over and above the bank FD rates. So I've considered here in the case of Coal India, I have jotted down the dividend declared by Coal India last 10 years, and the opening price and closing price of Coal India for that particular financial year. So if say for example, if I take an example of 2019-20, 2019, the start the value of Coal India was 236, the share price. It gave me a dividend of 24 rupees 50 paisa during that particular financial year, and it ended at a value of 140 rupees. So I got a dividend yield of 10%. But I lost money in the basic share price itself. So during this 10 years, I got a dividend of 200 rupees, but my value of share has gone down from say 350 rupees to 130 rupees, 140 rupees. So there are a number of examples like this. When people invest into high dividend paying stocks, they don't understand the erosion of the wealth they are getting into. So it's true that you made money in dividends, and it's also equally true that you lost money in the value of stock over a period of time.
Yes, yes.
Yeah. This is broadly true, and there could be some exceptions to this. So it's again a broad topic, but I'm just touching upon the fallacy with the retail investors to which they get trapped into. Yes, lottery to lottery, luring small retail investors. So there are a lot of marriage plan, education plan, retirement plan, child plan, baby plan, baba plan. Means this is all branding, which a particular product supplier brands itself into. If I take in terms of insurance language, then there is guaranteed maturity, assured wealth plan, double income, money back, Sanchay Plus, XYZ. And if I take example of stocks, then there is a split, you should invest. There is a merger, you should invest. There is a demerger, there is an acquisition, you should invest into. So retail investors get trapped into all these terminologies and then not able to decide what to do. So IRCTC, I'm taking an example of split. a stock is getting split itself, whether I should invest into.
Yes, sir.
Yes. Why?
You get number of stocks comparatively you had earlier. Maybe its price decreased, but some around it again picked the rise.
Okay. Okay. So whenever there is a split, one should invest into that stock because you get more number of shares at a lower value. Huh? Okay.
Yes, sir.
Hmm? Yeah. So that's not the case. That's not the case. I'm taking an example of IRCTC, which recently got splitted itself on the 29th of October 21 from rupees 10 to rupees 2. The face value got splitted from 10 to 2. So instead of one share, IRCT now has 5 shares. So what difference it will make to you when you buy a stock which is going to get split? So if you see, there is absolutely no sense in buying a stock which is getting split. Fundamentally, technically, whatever is happening, it's happening. But in terms of the investor, there is absolutely nothing wherein you can make a money over there. Its only thing is that the number of stocks has increased. In case of IRCTC, the value was 4565 pre-split. After split, it came down to 845. There was a sudden fall on that particular day because of other reasons, because IRCTC was already overvalued over there. So after split, the ideal value would have been 913 if I consider the pre-split price of 4565. But on the date of split, it went down to 845. Now I think it is trading at around 880 as of now. So it has not touched the pre-split valuation. So there is an investor of mine who is retired. Retired matlab 65 plus years, middle into his retirement cycle, and then he had a good amount invested into mutual funds. He withdrew 5 lakh rupees from mutual fund and said that I am investing into IRCTC because IRCTC is going to split. 65 years retired person, no source of other income other than what he has saved during his accumulation phase, investing into stock which is getting split and having no knowledge about the fundamental of that particular company. So again, there are a number of examples of this. See, the price will increase depending on the performance of IRCTC. It has nothing to do with split part of it. But nowadays, every day, the company starts declaring bonuses, start declaring splits, and then people start investing into those companies. So split does not make your investments any more valuable. Split may attract new investors who want to invest into lower price securities. The company's market cap will not change due to the split. The company's market cap will change to the extent the prices gains and falls because of changes in the fundamentals of the company, not because of the split. And people don't understand that part of it. Say, for example, why IRCT should get split itself into? What's the logic of IRCTC getting split? Now, if you heard of the MRF is now trading at say 80,000, 77,000 rupees per share. Sorry. Yeah, so MRF is trading at say 77,000 rupees. It touched a lakh of rupees. MRF is not getting itself split. MRF is not declaring bonus, not going in for reductions. Why? And why IRCTC want to reduce from 5,000 to 1,000 rupees or 10 face value from 10 to 2? What is the logic?
Retail investors can enter into that particular counter.
Yeah, retail investors, because company wants to attract retail investors, they want more and more people to get invested into. And MRF is not getting its share split. Why?
They are happy with the current investors.
They are happy with the current investors. They don't want to burden themselves of serving more investor base. The moment they split, the shares goes into more DPs, depositories, participants, and you need to serve those many DPs as well. So MRF is comfortable saying that I am comfortable with the existing set of investors. I don't want to increase my investor base, and it has no worries as far as performance of the stock market is concerned. If the company is performing well, the share price from 1 lakh rupees will go to 2 lakh rupees as well. And again, retail investors don't understand that part of it. Bonus. One side is split and one side is bonus. So herein I'm considering as a case of IEX, Indian Energy Exchange. Indian Energy Exchange recently declared a bonus, 3rd of December 21, 2:1. Means 2 shares against 1 share. So after bonus declaration, there is no change in the market cap. There is only change in the share price of the stock. And the number of shares has increased. As in case of split, the number of shares got increased. The same is the case with the bonus. The balance sheet effect is different. I'm not discussing that balance sheet effect part of it. But still people invested into IEX seeing that there is a bonus being declared, and then they say that they will get something free. They don't understand the changes in the price part of it. Mergers. Should I invest into a company wherein it is getting merged together? Two companies getting merged together.
It depends upon the swap ratios.
It depends on the swap ratio. Very good, sir. Thank you so much. So again, people invest into companies which are getting merged. Now I distinctly remember Vedanta Group. Vedanta Group merged itself, like Kane India. Then Kane India was there. Now this is only single entity. This CESA Goa was there. So they merged all their entities into single entity to take benefit of the one loss-making company and then another profit-making company. They wanted to take tax advantage over there. And now they are talking about demerging themselves. They earlier merged themselves. Now they again want to demerge themselves. So they took, they saved taxes on one company. Now again, they want to split themselves into different companies. So there is a talk of companies which are getting demerged. Now, say for example, ITC, there is a proposed demerger of ITC, a long pending decision. Reliance is again proposing itself to demerge Reliance Retail, Reliance Jio, and lot of retail investors want to buy Reliance only and only because it is going to demerge itself into. And then they see a lot of value in case of Jio. They see a lot of value in case of Reliance Retail and other companies which will get will evolve means after demerger of Reliance. So again, it has nothing to do. It all depends ki which demerged entity will have which businesses and which businesses you are bullish on. So one should not invest simply based on mergers, demergers, splits, and bonuses. Yeah. So again, this is very interesting part of the financial discipline. People invest into hard assets. Hard assets, I'm taking an example of land. Hard assets, and then compare vis-a-vis financial assets. A lot of people, lot of the audience over here may be a learned audience, and then you may be investing into financial assets. But I still see that we, as a country, we say that we are only 5% into financial assets, or 10% into financial assets, and 90% into hard assets, as compared to other parts of the world wherein they are about 50% into financial assets. and people don't understand how people don't understand the importance of compounding. They don't see what is the land return, what is the return being generated by the land you are investing into. So I'm taking a classic example of myself. I recently, matlab 6 years, 7 years back, I invested into an asset, a plot. And again, I have noted down a lot of examples which I'm not covering over here. I interact with a lot of retail investors, and then I keep on talking to them. I say that they share their asset purchases. So when they share their asset purchases, they say that 50 years back they bought this land at 1 rupees, and now this land is at say 10,000 rupees per square feet. And then when I ask them ki what is the CAGR return of that particular land, they are blank. They don't know. They only understand that 1 rupees has become 10,000 rupees over a period of 50 years. When I say that if you would invested the same 1 rupee into mutual fund or into a stock or into a portfolio, that would have become 20,000. Then they are aghast over there. They don't know what to say. So I recently bought a land for approximately 25 lakh rupees, and then I paid that amount over a period of time. So what I did is that I kept I'm keeping myself abreast with this particular development. I'm tracking that part, and then this tracking is there for other investments also. What I did for other investors of mine, which I shared that a land of 1 rupees has become 10,000 rupees over a period of 50 years. So what I did is that whenever I paid money for buying that particular land, I said that I am investing same amount into, I considered over here DSP FlexiCap fund. I considered DSP FlexiCap fund as a representative of a mutual fund over here. And then I invested the same amount into that particular fund on that particular day. So this summary sheet tells me that as of now, I invested 25 lakh rupees into that particular piece of land. That particular piece of land value is about 25 to 28 lakh rupees still. When I bought that land 25 years back, 25 lakh rupees, it's still at 25 to 28 lakh rupees. Even if I want to sell that particular land, I'll not able to sell that particular land. I'll not get that liquidity which is available into financial assets. If I would have invested the same amount of 25 lakh rupees which I invested into plot into this DSP FlexiCap fund, my current value would have been 44 lakh rupees, generating a return of 19.98%, that is approximately 20% during this particular period. So this value is as of 19th January. I calculated this today itself, and this is yesterday's NAV valuation. And then I'm doing this for all my retail investors, as I said. And then I don't find very few instances wherein a hard asset is able to beat a financial asset. Very few. Even if I consider the tax benefit, even if I consider the rental income over there also. Everything taken into account. Because the genesis of land prices going up is all depends on the performance of the economy. If the economy is performing well, the prices of other assets will rise. If the economy is not performing well, nobody will give value to my land. And if economy is good, then market, the share prices will be far better than what, like gold or silver, or for that matter, your PPF, or for that matter, your land is giving to you. So again, this is jargon, means when people invest into plots or flats as an investment option, then they get trapped over there. If they don't understand the returns they are getting generated, they understand that they are getting an income of 20,000, 30,000 as a rental income also. But what I mean to say is that you need to put into CAGR terms at the end of the year, last 5 years, 10 years, what is the CAGR return that asset generated for you? Yeah. So this is the last slide of my presentation. Be responsible for your right doctor. So as I shared that this jungle has a lot of questions over here. So you should be careful that you should be responsible, not careful. You should be responsible for you choosing your right doctor. So I taken one example. You must have heard this case. This is a very famous case. Suchitra Krishnamurthy settling case with HSBC. This is 2014 case. Huh? This is 2014 case. Suchitra Krishnamurthy got a lot of money out of her divorce, and she invested a lot of money through HSBC. And HSBC kept on investment into different assets, kept on churning the money, making a net loss to the client. And then she took up with SEBI, and then she went to almost everywhere. A lot of people supported her in that case, and then she won the case and then settled the case with HSBC. So as a retail investor, one should be responsible for choosing the right doctor. Either you have your own expertise, and then if you don't have the expertise, then be responsible for selecting that expertise. So what we say is that in Hindi, there is a saying that like आप means गरीब पैदा हो सकते हैं, but गरीब मरना means ये आपके means ये आपके हाथ में है, आप गरीब बनना चाहते हैं या नहीं करके यानी. So if you are responsible for right doctor, then you will be able to make money over there. So be responsible for your first million, and to conclude, and then for your next billion. So that ends my presentation, short and sweet. So if you have any queries, questions, I'll be happy to answer all of them.
Sir?
Yes.
How can we find like stocks or best companies? Like what should read or in balance sheet or क्या देखना चाहिए sir? What exactly we find out?
Yeah, so balance sheet, good question. So I'll again share. I shared that slide of Andhra Cement. Huh? So I am sharing only the one part of that particular thing. Let me share that again. One minute. Huh? Yeah. You suggest what one should look for?
To choose a particular share or particular company to invest. Generally, if we go through with fundamental analysis, then we'll go through with the balance sheet, like the borrowers, long-term borrowers, debt, profit.
Yeah. So the fundamental is net profit, EPS, whether company is making profit or not.
Yes, sir.
If company is not making profit, then share price cannot make a profit. Your share price cannot grow. It can grow, like as of now, there is a tsunami is there. So tsunami, every tree gets uprooted. Huh? So if there is no wave, then no company will perform. So herein, if net profit is not there, I will not go with that company. Fundamentally, first of all. Second part is there is a growth in the net profit or not. If the net profit is stagnant, then I will not participate into that particular company as well.
Okay.
Whether company is growing or not.
Maybe some changes, like some companies acquire new building, new land, so maybe they reduce their profit. In that case,
you see that part as well. No? Means you need to see the cash flow part of it, where cash is coming and where cash is going. So, and then there is also a lot of jugglery. Again, it's a different topic altogether. If you want to, if you go into the dissection of the balance sheet part of it, even if you read the cash flow, the company will say that is investing into lands, and there is a debtors. So debtors days keeps on increasing. So there is no point in investing into company which is not able to realize their sales part of it.
Okay.
Yeah, but net profit should be there. Net profit is not there if companies invest. See, profit will always be there, na means. Profit will always be there. That profit will go into business. That's a different part altogether. If the company is paying on interest or depreciation, you can always see that part of it.
Okay, sir.
The profit before tax, again, it's a very good judgment to understand what's happening with the company. Yeah, thank you. Thank you for asking that question. Any other question?
Any other questions from the participant side? Participants, if you have any queries, the forum is open.
So I have a question for it. I have a question. Mutual funds give dividends, true or false?
No.
Mutual fund declares dividends, true or false?
False.
They give dividends, sir. Yes.
Okay. Mutual funds gives dividends.
Yes, yes, yes.
Okay. Then why someone says false?
If you are investing in dividend scheme of a mutual fund, then they will declare a dividend if
Got
there
that.
are profits.
Got that. Now see, now again, this is a fallacy. Mutual funds don't declare dividends. Now earlier there was a term dividend being used in case of mutual funds. Now SEBI has corrected itself, and now they say that what they call that as income distribution cum capital withdrawal scheme. I am putting in the chart for everybody's knowledge purpose, income distribution cum capital withdrawal scheme. Now no more they use the word dividend, because dividend are being declared by the companies, individual companies. Mutual funds cannot declare dividends because they are not earning, they are not making profit, they are not making profits, they are only simply investing, and those investment prices keeps on increasing or decreasing depending on the performance of the underlying assets. So they cannot use the word dividends over there. Hope I make myself very clear to you. Okay. Now someone also asked in the chat box, should I respond to that? Raza sir is asking, sir, kindly tell how the correction takes place in a particular stock or overall in in overall stock market. Yeah. So if you see in particular stock, then as I said in 2008, infrastructures were the selling cakes. Huh? Everybody wanted to buy infrastructure stocks. Now everybody wants to buy IT stocks. Everybody wants to buy IT stocks and nobody wants to buy automobile stocks. Automobile stocks are untouchable as of now. So IT is overvalued. IT is overvalued as compared to other stocks. Now IT may remain overvalued for a long term depending on the earnings given by the companies into those who are into the IT domain. If the companies are not giving returns, then it is just likely to they are likely to fall themselves. And the same thing happens for the broader market as well. If the overall valuations are on the higher side, if the companies are not making money, the market will fall. And there are other reasons as well. There are many reasons to fall, but fundamentally, if the prices are not, the earnings is not there, then market will not sustain itself. Okay. Any other question?
Sir, what is the pledge shares? Pledge shares. Concept of pledge share. Company are pledging their shares.
Okay, pledge shares.
Yes, sir. So, वो companies को हम किस तरह से identify कर सकते हैं कि they are good or not? Maybe their share are on pledge, but they are continue getting profit.
Mm-hmm.
So यहाँ पे सर क्या कंसिडर करना चाहिए, उनका प्लेज शेयर रेशियो देखना चाहिए या प्रॉफिट ही देखना चाहिए?
नहीं, प्लेज शेयर आप देख सकते हैं और प्लेज का कर क्या रहा है वो देखना चाहिए आपने ना। प्लेज, सी व्हाट इज प्लेज, व्हाट इज प्लेज?
Kind of गिरवी, like आपने
गिरवी, yeah. So when I buy a home, when I go for a home loan, I am basically pledging my home to the bank.
Yes sir.
So should I be pledging my home or not? If I don't pledge my home, then there is no money with me, I cannot buy a home.
Yes sir.
So there is nothing wrong in pledging a particular stock. Only thing is that what the promoter is doing with that money.
Okay.
So that is very important, huh? And so you need to understand that part of it. And company is making profit, then I don't have any problem with that particular thing. And then when the promoter is pledging, say for example, means now Adani Group, if you see, there are a lot of stocks which are pledged, and the valuations has gone rooftop, and my stock price is 1,000 rupees, and then I am pledging at 250 rupees. I am getting that much of money. Whether my stock value is worth 100 rupees or not, nobody knows that part of it. Only person who understand the business part of it can say ki what is getting traded 1,000 rupees is worth 100 rupees or not. So again, you need to understand that business they are into and the balance sheet again.
Okay sir, thank you.
Yeah. Anybody having any other question?
Okay. So no other questions from the participants? Okay, so here we come to an end of our day 4 of this FDP. Thank you, Manish sir, for sharing your practical insights, and definitely this is going to help us when we are, meeting our advisor as to what sort of gimmicks he or she is using. One gimmick which I would like to, from my personal experience, would like to share, if you allow me.
Absolutely.
The one is like the जो आपके known ones होते हैं, especially with due respect to all the advisors, of course, but the family members or the friends or the relatives who are into this business and who are an advisors, I believe they play more gimmick with you in terms of अरे मेरा target है, so please एक इतना investment कर ले, इस fund में investment कर ले, and my target will be achieved. And we, on a friendship note, we sometimes do that. Like I have done my investments in mutual fund on this only, so I believe this is also one of the gimmick.
Got it. But that is a straight way, means it's
yes.
You may call it as gimmick, but it's a straight way. They are saying that this is what you want to do it, means
yeah.
Straight conversation. And then there are people who don't understand the subject part of it, means because of their innocence, they are not able to understand the subject, and then that's why the gimmick gets played out in the background itself.
Absolutely.
They even don't know that the gimmick is getting played over there.
Absolutely.
Yeah.
Okay. So thank you so much sir, for an interesting presentation, and it was definitely very interactive session. Thank you so much, sir.
Thank you so much. I can log myself out.
Yes, sir. Thank you. Bye.